Well, I'm joined in the studio by Peter Rosenstreich, the Chief Market Analyst at ACM Advanced Currency Markets. Thank you so much, Peter, for coming on the show. What a week.
Very much
I mean, it has been incredible because suddenly all of the worries on sovereign debt have come to the surface. First of all, what does it mean for the euro? Because this, of course, is a currency where we're seeing the most trouble.
Right, absolutely. It changed the game for the most part. About 2 weeks ago, you could not find a dollar buyer anywhere across the board. And now all of a sudden people are talking about the resurgence of the dollar and the sudden weakness of riskier currency trades. So, it's a game changer. It's one that the markets really need to watch out for. What that means for the euro dollar is how much correlation do we see between the risk appetite trade and the euro dollar. And what we've seen recently is there's been an erosion of that correlation. So every time there's a risk event like the Dubai, like Greece, we're seeing a lesser effect in the erosion of the euro's sort of overall strength. So that's really what we're seeing, and that's a trend that's going to continue through 2010.
Peter, we're not talking about default at the moment. I mean, we just heard from John the pigs, the Portugal,
right.
Ireland, Spain, they're not at risk of defaulting.
Correct. I mean, what we've heard and what we're looking at in terms of budgets, tomorrow we're not going to see a massive default, but it's something that we need to constantly monitor. We made the mistake of perhaps misreading the credit market slightly, going into the financial crisis, saying, well, these the spreads in rates, the spreads in CDS were widening. We didn't quite perhaps factor in the importance of this, and we're not going to make the same mistake twice. Credit, I believe Greece is now above Ireland in terms of CDS, the pricing, and I think that's something that needs to be continued to watch. And if budgets are going to be the focus of 2010, I think the euro, the EU has some significant weakness there.
So give us a couple of levels, Peter, in terms of what we're seeing the euro-dollar year-end, but also into 2010.
Well, we think that we're going to see a small pullback in the euro-dollar. We're seeing part of that now. We'll see a continuation in Q1 2010, back to about the 140 levels. Nothing drastic, but a slight pullback in euro-dollar. From there, we expect growth differentials to really take into place, and for the Eurozone to catch up to the U.S. and really outpace the U.S. in 2010. And that should mean euro-dollar strength. And we go back up to the 150 levels and above that, in late 2010.
Peter, I also wanted to get your view on the pound. Now, we had some very big news, actually, from the Chancellor Alistair Darling on that pre-budget report. I mean, deficits are also a huge concern here, although Moody's said, well, we're not ready to downgrade.
Yeah. Well, again, going back to that budget is... are we in the financial markets, or do we have to become accountants now and look at every line item in budgets? It might be the case. And we'll see very quickly how important budgets are to the financial markets. Our overall view is right now we're teetering on a massive head and shoulders pattern at the 162.50 levels. How that trade sort of takes shape is really going to define the pound's strength. If we break below that, I think there's some significant downside risk to the pound. But should we be able to stay above that support, I think heading back up with the resurgence in risk appetite, we're seeing some good news out of China, which means that the equity market should bounce and the cable should get a bounce. We head right back up from that neckline.
All right, Peter, thank you so much. Great to have you on the show.